Major moves. We going all in, like we got nothing to lose. We making moves. We making major moves. We making moves. We making major moves. We making moves.
Welcome back to my channel. I want to thank you guys for actively deciding to spend time with me. I'm just a guy in a Spider-Man mask, a cool one I might add. I'm not a financial advisor. I'm just providing information and content already on the internet, and I just read it and present it to you guys in a way that may reach you or may not reach you. Whatever the reason is you found my page, I'm grateful you're here, and thank you for spending time with me. Let's get into this.
What is up, everybody? I am Mr. Man, and I came tonight because I was listening to some podcast today, or an audio today, listening to the Digital Pound Foundation, and man, I got inspired. I had to do a video. I had to. You guys deserve to know this stuff that's sitting in my head when I listen to this stuff. Anyways, this here is the connection now with the BOE and Ripple, all right? I'm not saying that they may be with them. I'm going to suggest that they are already with them. They've been with them. They've integrated with ILP already, Interledger protocol. And now we're just waiting for the announcement, okay? I can post as many videos as I want of, oh, they're talking about this, they're talking about that. I'm going to show you empirical evidence what they're talking about here, okay? This is on the UK Parliament's website there. I can't show you guys there, my screen here. Right there. Cuts it off. Okay, so this is Ripple evidence. Central bank here. Central bank digital currencies. Introduction to who Ripple is. Okay, relevant principles for considerations. And then it goes CBDCs. Ripple believes the following points are relevant to the question posed by the House of Lords Economic Affairs Committee. CBDCs offer benefits that fiat currency does not. We believe there is a place for reliance on both physical and digital currencies, and use of one need not preclude the other. That said, digital forms of payment offer unique benefits that fiat currencies do not. Specifically, unlike cash, a CBDC could enable micropayments or otherwise be programmed for specific uses to support government aims or micropayment policies. I won't even lie, that's some scary shit right there. Such as delivering targeted financial stimulus support to individuals and businesses. Notice we are going through an inflationary period right now. We are at the top. Interest rates are right up there with it. People are going to get their butts handed to them, foreclose on their properties, lose all their toys, try to sell things at the top, can't sell it, saturation of real estate. Anyways, they're going to need stimulus checks. They're going to need green initiatives for, like, get this new thermostat to keep track of your home and to have it throttle your heat and turn it off whatever the case is. Get this new electric vehicle. We'll give you, $20,000 off of the price because it's green, and we want to get you guys all into the green. So stimulus checks there, right? Demand and support key industries and policy outcomes like the green economy or decarbonization. There we go. Ensuring privacy considerations are met must remain a top priority. Depending on how they are issued, CBDCs may require central banks to take on additional operational tasks such as KYC analysis, leaving them responsible for protecting large troves of sensitive information. So when central banks are doing KYC, it's not like the China model where it's direct from the central bank, the PBOC and the HKMA, People's Bank of China, Hong Kong Monetary Authority, and that goes directly from the central bank to the participant or end user, which is you and me. That's China's model. That's not how this is going to be. This is a two-tiered model where it's central bank, commercial bank, from the commercial bank, the retail customer. The commercial bank does the KYC on us. The central bank does the KYC on the commercial bank. That way they know who their customer is. We are the commercial bank's customers. The commercial bank's customers. The commercial banks are central bank's customers. That's who they are KYCing. That's where smart contract comes in. That's how they know who they're. It reduces fraud completely. I read that. Okay, maintaining user privacy includes protection of customers' data is key to ensuring continued confidence and trust in money and payments. Should the UK government be able to balance these objectives, a CBDC might well bring many unbanked or underbanked people into Britain's financial system for the first time. So here, this is Project Ubin. Okay, this is from the Bank of Canada, the Mass Monetary Authority of Singapore. I got it up here already. England typed into there. We'll see what England has to say. I don't want to read that one. I don't want to read that one. I want to read this one here. So, the work undertakes a line of equity emanating from the paper, cross-border interbank payments and settlement, authorized by the Bank of Canada, the Bank of England, the Monetary Authority of Singapore, HSBC, and a group of other commercial banks in the United Kingdom. So this project, these are the participants in this project right here. Project Ubin, Project Jasper, Project Ubin Jasper. That was a POC, proof of concept, from Canada to Singapore using these entities here. So let's take a deeper look into, this is Project Ubin. Okay, so Project Ubin, SGD, on distributed ledger technology. Okay, whoops. So Project Ubin used 2 blockchains. That's what they used, okay? Which can dramatically accelerate. Okay, so let me read from here. Okay, one of Deloitte's most notable prototypes is the key cross-border payment application. In the current payment ecosystem, cross-border payments are marred with expensive and uncertain transaction fees, long processing times, and often opportunity for fraud. With DLT, the reliance on some intermediaries, such as correspondent banks and notaries, can be reduced, since every actor on the network can transact directly with one another, because, like we just read, they KYC'd each other. They know who they are. They've already established that trust right from the top, which can dramatically accelerate transaction time. You're not KYCing each time, just like when you set up your trust line on your wallet to a exchange, or from one wallet to another wallet. You establish a trust line there, and it saves all the information. You know who it is. You can send it whenever you need to send it. DLT handles that validation, verification, and fulfillment of the payment in near real time without the need for costly fees, thus increasing efficiency and driving cost savings. Another key consideration is the identity of the user making their transactions verified, streamlining KYC, like we were talking about, process, and leading to greater fraud prevention. The prototype integrates Ripple and Stellar blockchain platforms to enable person-to-person transaction across geographies. DLT offers significant benefits to both P2P and business-to-business payments in terms of cost savings, increased efficiencies, and improved security. Cross-border payments have plenty of room for innovation, and the future looks bright for DLT within this use case. We see the 2 of them already for Project Ubin, Project Jasper, from Canada to Singapore and England. We're building up England's rap sheet here, okay? So this is the POC with the BOE, strictly just the BOE of this time. What the heck? Here we go. So FinTech Accelerator, proof of concept. Second POC, proof of concept with the BOE, Bank of England. Ripple exploring the synchronized settlement of payments using Interledger protocol. Okay. I want to go back to this one here. Not this one, but this one. Synchronized payments, okay? Is it this one here with Deloitte? Here we go. So, connectivity of the DL network, the DLT network. The DL network was connected to development instance of mass real-time gross settlement systems using Swift Simulator. This was done to automate and synchronize, there's that word again, the DR balance in the DL with the real-time gross settlements and DR cache custody. So they're talking about the same thing. the synchronization, right? We just saw that in the Bank of England. Now we're here with Project Ubin. So Project Ubin from England to Singapore to Canada, they're talking about the synchronization as well. And then here, they're talking about the synchronization of a Swift simulator, right? Using Ripple and Stellar. So let's continue. This here is using Interledger now. That's what this is using. Interledger is a different product from Ripple, which they had given to the W3C, the Worldwide Consortium. I'll show you guys who they are afterwards, because that plays into this. The Bank of England FinTech Accelerator works with innovative firms and new technologies. In this POC, we wanted to explore the synchronized movement of two different currencies in two different simulated real-time gross settlements systems using Interledger. So we saw what those two different currencies were already. XRP with Ripple, XLM. Those will be the two platforms they're using, those will be the two DLTs they're using via Interledger. Wholesale, retail, and the currencies they're using, I'm not 100% sure. That could be the MAS, that could be the BOE or the UK dollar, or that could be the Canadian dollars. So the bank has also recently started a program to work to replace the UK's real-time gross settlement. So the UK's, we had read about that already up in here, right? This is Ripple introducing themselves to the UK's parliamentary and the UK parliamentary individuals here. They're talking about the CBDCs here, assets like XRP support the software solutions like the CBDCs here. So they're saying XRP. When Ripple had written to these individuals, specifically quoted XRP. We saw the proof of concept now. Project Ubin, Project Jasper, the combination of the two of them. Project Ubin Jasper, using XRP, XLM. Ripple, Stellar, all for synchronized payments at that point, for RTGS, real-time gross settlements. The Bank of England has been operating RTGS since 1996 to provide a safe intermediate way for banks to exchange payments. Since 2006, it has been paying interest on reserves held in RTGS to support the implementation of monetary policy as set by the Monetary Policy Committee. The vision of the renewed service is set out in the RTGS Blueprint document published May 2017. In that vision, the bank explained that it planned to introduce new functionality to support the synchronization of cash movements made in RTGS with the movement of cash and assets, tokenizations, held in other systems in the next generation of RTGS. More detailed analysis of the benefits and costs of the different technical options was, however, required. The POC formed part of the analytical process. It should be noted that the bank's POC process is completely segregated from core systems. So they still have their legacy system being used and operated here. That's their core system. And now this RTGS system is completely different. They might connect, or they might be separate and have something that links them together. Could just be two data points itself running parallel to see where the needs, probably parallel. That's what we do in aviation. We would run two systems parallel to see, we know how this one performs already, so we got to see how this one performs with the same data and do what we can to break this system. That's the goal, is to break the system. And then you get the company, the sponsoring company, or the entity that you are getting the software from, to find workarounds or to come up with fixes for this so they can make the program better for them to use. And at that point, when they are ready, then they will deploy this, and they're going to hold it still. That's the coexistence period. They're going to hold both of them. So they're going to hold the Swift. We saw that already. And then they're going to hold Swift over here too. Isn't that neat? One might be live, one might not be live, right? It could be the sandbox still that they're in. Actually, as we say sandbox, let me show you guys this, okay? This is my Twitter. Remember what I said? I said sandbox for the UK, Bank of England, okay? So this is Laura Douglas from Clifford Chance Law Firm, international law firm out in the UK. All right, and this is the Digital Pound Foundation conversation. Jana in the top left, she is part of the DPF, Digital Pound Foundation. The other one there in the middle, I don't remember where she's from. Lee in the top right here with the Aurora Borealis, he's from AVAX. And the other individual there, Duncan Treholm, he's a lawyer, but he's also something else. I don't remember what he is. But right now we're listening to Laura Douglas.
Changes that haven't kind of materialized in regulatory frameworks. But then I think, particularly in the UK, obviously we're expecting sort of additional consultations to come out, hopefully relatively soon, on sort of a digital settlement assets framework. And of course, Treasury has already consulted on sort of financial stability type considerations around systemic importance and systemically important digital asset settlement systems. So I think, and maybe in terms of, what's the way forward, really thinking of, on the digital settlement asset side, I mean, we already have a range of types of money or payment instruments, ranging from kind of central bank, money. So, reserve accounts that only large financial institutions tend to have access to commercial bank money, to sort of, probably more on the retail side, e-money. And, each of those has a slightly different regulatory regime. And that is reflective of, the different characteristics of those different sort of, settlement mechanisms.
Okay. And
global reach, rather than markets necessarily being, an exchange in one particular jurisdiction, also raises a lot of tricky legal questions as to even which is the right law or regulation to apply. And so sort of in that context, I think what we've seen in practice clients doing is, particularly those, we've kind of worked with both the sort of the crypto sort of world, but also, more traditional financial institutions looking at the benefits of DLT and the technology for tokenizing, for example, traditional securities or digital settlement assets as, an alternative to cash or other forms of money. Say around the UK is very much that, our framework for regulation of crypto assets is coming. We've got the Financial Services and Markets Act 2023 there to lay the groundwork for that. Similarly, for a broader regulatory framework for digital settlement assets, we've got the sandbox coming, but we don't have the full shape of that yet. And so actually,
we've got the sandbox coming. We've got that sandbox coming. I told you all. I told you. Okay. So, there are some stipulations. Oh, no, we're not there yet. This is Project Stella. That's what it is. Okay, let me show you Project Stella. This is Project Stella. This is by the ECB, European Central Bank. As I go back here to England. Okay, listen to this, okay? So cross-border payment scenario, Bank of England also laid out the potential model for synchronized payments settlement, which involves a trusted third party that offers synchronization services. Who are those synchronization services? There was Interledger, there was Ripple, there was Stellar, which could be applied to simultaneous settlement across ledgers and across currencies. Those two ledgers can manage multiple. Those two ledgers can convert into any currency that exists. That can convert into real estate. It can convert into a block of cheese. It can convert into anything with value. Bank of Canada and the Monetary Authority of Singapore explored interoperability between two DLT platforms using hash time lock contracts. All right, that's atomic settlements, which were also studied in the second phase of Project Stella. They simulated a cross-border high-value transfer across DLT real-time gross systems on different platforms. So there we have more. Here we go. A community group of the World Wide Web Consortium is developing further the Interledger ILP, a set of rules that allows payments to be sent across different types of ledgers. Okay? So the XRPL can interoperate with any and everything it wants. Like it can convert to whatever it wants. Whatever it wants. And same with the XLM protocol and ledger. And these two are interoperable, but then you have the bridge now with Interledger connecting these two of them. And the two of them, front end, back end, via Interledger, which is also interoperable with anything. And it's just the internet at that point. It's just the internet. So the Interledger is given to the internet. You're going to have Ripple over here, which is by a company. You're going to have Stellar over here by a company. And the bridge, the highway that connects them, is just the internet at that point. That's how this is going to work with the Bank of England, Stellar, and Ripple. And once the BOE rolls out this, you would believe it's going to be magic. And she just said they're coming out with the framework for 2023. We got global stablecoin standards coming out 2023, re-evaluation 2025. Let me get into this here about the digital euro dollar. Okay.
Example 4,000. Then you take out automatically 1,000 from your bank account, and then you transfer 4,000, and the one who received the 4,000, their 1,000 or what is going above the limit is going automatically into the bank account. So it's very concentrated on the transfer, and in the context of corporates, as I understand it, the limit is at 0, so it's all a kind of waterfall solution.
Mm-hmm.
And yeah, there the digital euro payment system will be competitor to Visa and Mastercard.
Mm-hmm. Let's stay with the holding limits. Daniel, you said the use case of holding limits will complicate the whole infrastructure, and like the use of a digital euro. What would be your solution? No holding limits?
So sorry, was it me? It just broke for a second.
Yes, please.
Yeah, absolutely. Yeah, sure. So the point is again, I mean, this holding limit, especially considering with like other use cases, it's just too complicated. So I mean, the only concern that we got, if there's the possibility at all to design a system which is consistent, usable, even easy to use, and so on and so on. So and then especially the holding limit, which makes the things difficult, especially if you want to have like holding limit for one account, holding limit for multiply accounts, which is owned by one person, holding limits for online and offline payments, holding limits for accounts that are owned by multiply.
So why would they want a holding limit in your account? It's not because they want to control you, but rather do no harm to the economy. That's the goal for them. They could give a rat's behind about you and I. What they want to do is allow that transition to happen as seamlessly as possible. Because if everyone just started rushing into digital currencies, the other world, the regular world we live in, the cash fiat world we know and have grown up in and come to love, I don't know why, but we've come to love that world, which would just collapse so quick. If everyone felt that digital currencies were the safest place to run to right now, everybody would go into there. But it's not. Cash right now looks like it's the safest place due to the strength of the US dollar, in comparison or relative comparison to every other dollar out there. Or, yeah, every other dollar out there. Canadian dollar, Japanese dollar, whatever they're called, the yen, yuan, the euro, the marks, the whatever other currencies are out there, the U.S. looks the strongest, relatively speaking, to the strength of the other dollars as well. Well, let me let this finish playing here.
Persons, people, and so on and so on. So this is what makes things actually more complex. But there might be that. I mean, there can be a good system designed nevertheless. So what we were brainstorming actually a little bit in the working group, if there could be another way, because I mean the motivation behind holding limit is to limit the store of value functionality of money. Not to disintermediate the banking system practically, or not to compete with the banks. So the question was if there can be a functionality which efficiently limits the store of value functionality of the money without introducing holding limits. And then ideas are like, setting like a hyperinflation to a coin, or setting a time limit for the money, and so on and so on and so on. But this is very much, it was just a brainstorm. So I wouldn't say that like holding limit is wrong. It's just we were a little bit like considered if there's a possibility to limit the store of value functionality of the money without introducing holding limits. Again, and the idea is like hyperinflation of the coin, or somehow time limit of the coin, and so on and so on.
Well, there is one solution which would be to implement a tiered system where you say, okay, 3,000 are without interest rate, and afterwards you have to pay fees or a negative interest rate. You can name it like you like. If there is stress in the banking market and people are withdrawing their money from their bank accounts and putting it to their digital euro account, then the ECB could theoretically increase this fee above the threshold, and so requiring a higher negative interest rate, and this would then discourage people from putting money, transferring money, private money to the digital account. So this was an early idea, which even came from the ECB itself, but obviously politically it seems to be too hot, or I don't know, and so they have decided or now proposed by the EU Commission that to skip this idea altogether and to stick to zero interest rates and a holding limit. And perhaps it's politically wise to do so. In economic terms, I would say it would have also be a solution to have holding limits in combination with the possibility of a negative interest rate. The thing here is that, and it's a caveat, let's say, that it's not so easy to tell the people, hey, you get a digital euro, which is kind of a substitute for cash money, and at the same time you say, but you can only hold 300 or 3,000 euro in it. So then the people say, okay, but you tell me it's a substitute? No, I can hold 10,000 or 100,000 in cash money. So it's not a substitute. So this is a kind of problem when we are talking about acceptance. And the ECB and the EU Commission seems to have find this kind of compromise, which maybe is wise. I'm not sure, but that's what they found as a solution.
I hope you guys enjoyed this show here. It just hit me, and I had to come out and do this one. This one was, I enjoyed it. All about the BOE, the ECB, Ripple, Stellar, Bank of Canada, BOC, and MAS, Monetary Authority of Singapore, with the two projects there, the proof of concept with Ripple, Project Stella, and the integration with Interledger, and how Ripple and Stellar work together with Interledger as that highway information between the two of them, or the bridge between the two platforms. Hope you guys got something out of this. Love ya. See ya on the next one.
Making major moves. We going all in. Like we got nothing to lose. We making moves. We making major moves. We making moves.